just a bit because we have to deal with some macros which have come out. It is the CPI data for the month of July, which has come in at 6.07%. So it has not come drastically above 6%. It is largely in line with estimates. In fact, the IIP data has also come in at around 2.10, and that compares to our poll of around 2%. So both the July CPI inflation data as well as the IIP data for June has come bang in line with what the street was estimating. So 6.07% in terms of the CPI inflation data, which was expected to rise because of food inflation, and those kind of internals we'll just get to in just a bit. But we do have the IIP data too, which is largely in line with estimates for the month of June, which has come in at around 2.1%. We have our panel of experts. We have Rupa joining in. We have Anubhuti from Stancy, and we have Soumyakanti Ghosh from SBI as well. Thanks everybody for taking the time out and missing that Reserve Bank of India event at this point in time. But Soumya, I'm going to get to you first. Your thoughts in terms of the IIP data as well as the CPI. First on CPI actually, 6.07%.
No, I think at 6.07%, it's a little better than what we were expecting. So we're expecting in the mid 6.20. So that's obvious, around 15-20 basis point better. So I think the impact on the veggie prices may not have been that significant. But I think the other thing which I wanted to point out is that the core CPI has increased around 4.64%. So that is from the last time of 4.55%. So basically the core inflation remains flat. The CPI number as expectedly is over the 6% mark, even though it's not as bad as we are expecting. So overall a number which is largely in line with the expectations. And as far as IIP is concerned, I think that is also largely in line with the expectations. But my expectations from the IIP is not so much even in the next couple of months. And I think the numbers will either stay negative or marginally positive and oscillate between that. So basically, I mean, the market is almost a status quo, I can say, in terms of the numbers which we have got today.
Okay. Anubhuti, what are your thoughts on the headline figure of 6.07%? We're still waiting for the breakup in terms of food inflation, etc. But just on the headline figure?
Pretty much in line with our expectations. So we were looking at 6%, so it is marginally higher than what we were talking about. But if the core inflation number is at 4.66, which is marginally higher than the previous month of 4.5%, then our sense is that probably most of the pressure has come from food. And I think the food inflation might have, most probably has moved up towards 7.7%. Food and beverages inflation, to be precise, has moved up to 7.7% from 7.5%. So net, I think in line with
Anubhuti, just to help you a little bit, we've got the food inflation, which is coming at over 8% for the quarter. If we can just get the food inflation, 8.35% compares to around 7.79%. That's where it's coming at. So your thoughts on it?
Yes, that's what I was saying, that food, if we put it together for food and beverages, then probably we are somewhere in the range of 7.7 to 7.8%. And with the core inflation, if it has moved closer to 4.6%, this number is pretty much in line with our expectation. Most of us expected this number to be higher on back of higher food prices, and I think here vegetable and pulses once again were culprit. As far as other components are concerned, and especially we talk about core inflation, the move up from 4.5 towards 4.6 is primarily shows that the blip which we recorded in the previous month was just on back of base effect, which has faded away. And going forward, next 2 months we would expect the CPI number to be closer at between the range of 5.8 to 6%. The positive impact of monsoon should start showing up in the second half of fiscal year 17, and probably the numbers which are looking closer to 6% at this particular moment, will not be surprised to see the headline numbers less than 5% in second half of fiscal year 17.
Okay, Rupa, what are your thoughts with regards to the CPI at 6.07%? It's largely come in line with what the street was estimating, but your sense in terms of maybe the trajectory as well?
Yeah, sure. Because you know, for last month as well as this month, I was expecting it to be in the close neighborhood of 6%, and these are typical months when we see you know, spikes coming from vegetable, especially greens prices. But this time sequentially also we had seen between June and July, prices of certain categories of dal as well as tomatoes, onions had also spiked up. So this was in line with expectations, and the print for food inflation will remain on the higher side until you know, early September, mid-September, and then it will start trending downwards. Hopefully, you know, this year the most critical commodities which contribute to food inflation trajectory like pulses and all, their sowing performance has been fantastic. So I think in the second half we may see significant easing of food inflation.
Okay, well, we have a couple of more breakups which have come through on CPI. We've got the fuel and light inflation, which is coming at around 2.75% for the month. We've got the vegetables inflation, which is coming at around 14.06%. And we also have the pulses inflation, which is coming at around 27.5%, along with sugar, which is at around 22%. Remember that pulses has been declining for a couple of months now, so there seems to be a further deceleration which has come in. On vegetables, 14% is where it's come in at, and the street was working with the fact that sugar inflation is going to be higher, considering the uptrend that we've seen in global prices for sugar as well. Soumya, just come in on this. In terms of the vegetable price inflation trajectory, what's your sense? 14% now, when does the monsoon kick in and when do we see prices softening?
See, I think the impact on the vegetable prices is basically, apart from the fact that it has been driven by the significant increase in the pulse prices. If you look into the data for the last 12 months or so, it has been contributing around 90 to 100 basis points to overall headline numbers. So given the fact that and I also think there could be an uptick in the cereal prices because we were expecting in terms of the movements. Now, if you look into the prices which are occurring in the markets, in the wholesale markets in the month of July, they were fluctuating before they have started to decline in the last week of July. So I think that if that trend continues in the month of August, and given the fact that the pulses swing has been very impressive this year, I would not be surprised if that pulse prices at some point of time the weighted contribution becomes negative for the second part of the year. So that will immediately shave off, say, around 60-70 basis points of the overall headline CPI numbers. So CPI numbers from the current level, I think we may have, the numbers may have just bottomed out. So at 6.07%, I think the numbers will now start to trend lower, even though the first 1 or 2 months the incremental trend may not be that significant, but over the next few months I think the numbers could pretty well go down to close to 5%. But as of now, I think the worst in terms of the impact on the CPI may be over as far as the food prices are concerned. If I look into the trends and the numbers for the remaining part of the year, we may get some unfavorable CPI numbers, but that may not be over 6%, which is a psychological barrier in terms of the upper band of the inflation targeting.
Okay, well, we've got the IIP breakup which is coming through as well. So, for example, mining sector has grown quite healthily. So, 4.7% compares to 1.3%. Manufacturing is in the green. So, it's up 0.9% versus 0.7% in the previous month. Electricity has improved month on month as well. So, 8.3% for electricity versus 4.7%. Capital goods continues to decline. So, it's down around 16% for capital goods versus 12.5% previous month. Intermediate goods also awaiting that data at this point in time. Consumer goods 2.8% versus 1.1%. Durables has shown steady growth similar to previous quarter, 5.6 versus 6%, and non-durables, which is up 1% versus a minus 2.2%. Anubhuti, tough to trust the IIP data according to you, but your sense in terms of all of the numbers that I read out?
No, as far as IIP is concerned, we were looking at a good number of 2.5%. So in that particular context, yes, it's a little bit lower than what we were forecasting. But if we keep the backdrop in mind, this is one of the best numbers which we have got since October October 2015, and that is that is something which is encouraging. As far as the breakdown is concerned, I am a little bit disappointed. I was expecting a little bit more buoyancy as far as manufacturing sector is concerned, but it seems most of the growth has been driven by mining as well as electricity, which effectively shows that the theme in the IIP, that is core sector driving the IIP number, while capital goods, which is a proxy for investment, remains pretty much weak, and weaker rural demand has kept on weighing or pulling down the consumer non-durables on the lower side. So from the overall perspective, a good number. Breakdown, I'm a little bit disappointed. Pretty much shows that investment remains a drag. There is some bit of disappointment, some bit of improvement on the consumer non-durables as far as this number is concerned. Going forward, I will be a little bit more optimistic on IIP as a whole. Let's not forget, in the month of August, there will the disbursement of the pay commission will happen, and if you look at it in terms of quantum, almost 0.3% of GDP will get disbursed in the month of August, and probably a little bit more and that might just get a little bit spilled over in September. Now this disbursement will come just ahead of the festival season. So as far as consumer goods, to put it together, and especially within consumer durables, I would expect a much more stronger set of numbers coming for the second half of FY17, or most probably from August onwards. We can see better consumer numbers, both from durables as well as non-durables, and that should keep the IIP on a slightly better rate than what we have been seeing till now. So for the year as a whole, I'll not be surprised if IIP actually averages closer to in the range of 3 to 3.5% than what has been the performance, or to put it this way, it has been a pretty dismal performance in the first 3 months. Probably in the next 9 months, we can see IIP performing better as monsoon impact and as pay commission impact hits the headline number.
Soumya, any chance that you managed to calculate the core figure?
Yeah, I think I said at the beginning of the show, it's around 4.64%. So
Okay.
that is a minor uptick from the last month. So it's generally flat, you can say. For
Okay.
the last 18 months, I think core has been very steady.
What is that indicating to you?
No, I think that is one thing which is indicating is that the fact that the earlier, whenever the food inflation used to go up, there was the expectations that got generalized, spilled onto the core. I think that has been completely divorced, I think, as far as I understand, if I look into the data. So I think that's the positive sign. So even if we have a bad food number and a headline CPI number which is a little bit uncomfortable, I think still there is, and given the fact that core inflation is on an averaging around 4.5% for the last 17 to 18 months, so that actually gives hope for some sort of monetary accommodation. So I think that's the message which is coming out from the CPI data.
Okay, quick last word then, Soumya, from you. This is the first CPI data that we've got after the 4% plus minus 2% inflation target has been set by the government. So on a larger perspective, give us a sense in terms of how relevant CPI data also becomes in terms of tracking it on a monthly basis, because eventually you're working for a goal, and these monthly fluctuations are going to be as important according to you?
No, I think I agree with you fully, and in fact the good thing about the CPI data, if you look into them for the last several months, I think we have been able to now forecast the core CPI with alarming accuracy, but the headline CPI still remains a little bit wobbly. For example, it is driven completely by vegetable prices. So at the end of the day, I mean, the bad thing is that in India the CPI trajectory is now largely driven by food prices. So if you are looking at a band of 4 plus minus 2, I think that minus 2% band goes out of the window immediately. So as to me today, I think staying within from the upper band, more in the 5 to 6% band will be more of a reality from now on, rather than trying to move closer to the 4% on an immediate basis.
Okay.
Because I think the food prices will take time to boil down from the current levels.
Okay, Rupa, quick last word from you, then we have to wind up this conversation. Your sense in terms of incremental rate cuts?
Well, I don't think there is any scope before Reserve Bank of India is in a position to make assessment of the Kharif output and how that will impact food inflation trajectory. As said by some of the other panelists, in the second half, you see the rural demand as well as 7th pay commission is going to have definite impact on the CPI inflation trajectory. So there is one scope for final rate cut of 25 bips, which may happen in the fourth quarter or the end period of third quarter. But beyond that, I am not expecting, any rate action in the current financial year.
Okay, all right, Rupa, Anubhati, as well as Soumya, thank you very much for taking the time out and taking us through this data. The IIP has come in at an 8-month high and the CPI inflation has been hardening for the third straight month. But nonetheless, it is in line with estimates that, yes, it was expected to spike on account of vegetable prices as well as on account of food inflation as a whole. And that's exactly what has happened. But let's get back to Lata Venk.